The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Monday, the 17th of March. We're looking at the Dow up 102 at 41,598. Nice turnaround, but look at the work that has to be done to get this MACD, the green 9-period differentials across the 26-period exponential moving average. Whew, you'd have to have about another, I'd say probably 800 or more points to the upside for that to happen. And the same thing, look at that 9-period moving average below the pink, below the black 14-period moving average. To get it to go green, positive, you'd have to see even a greater move to the upside. And the stochastic is flat at 13%. So I have to treat this initially as a bounce. What I'm looking at here is the Chapman Wave Inside Track. So these are techniques that I've developed over the years. When I draw trend lines, sometimes I have them as trend lines that are just for informational purposes, but other times they're very important because in this case, I've got this diagonal weekly trend line that goes from that peak E top at about 42,800, comes down and it hits these lows that were made back in November, December, and all of a sudden it comes in perfectly for a Chapman Wave Inside Track propellant zone bounce. So what you have here, I couldn't call this Chapman Wave Roman candle, but I'll treat it as if it was that. This is the weekly candle. We've just begun the week. We're just 30-something minutes into the first trading day of the week. But at any point this week, if there is an intraday move that for 90 minutes or more takes the Dow down below 41,150, there's a real good chance we're going to test the 40,661 low of Thursday. But if we're able to move, even if it's this kind of, the Dow is a little bit different to, say, the QQQ, which is much stronger. If the Dow up 134, up 0.31% at this particular time, and the QQQ is up, I think, something like where are we? It's only up 0.30 right now. Oh, it did very nicely. Now it's pulled back. All right. Well, if it's able to get into the halfway marker, the body of this candle, above 41,000, that 41,900s, if we can get there, that's going to be the big resistance to try to power through. I don't know if we can do that, but that's what I'm looking at as a possibility. This monthly chart, so the weekly chart is arched over, taken out on a closing basis, all the left side lows of importance in the H to M pattern. But we'll see this week if we're able to close above the low of the week of the 8th of November, and that low is 41,647. Right now, we're at 41,615. Interesting. So this is a work in progress. There's so much disbelief. There's so much angst and trepidation. This is where you can get a more sustained move to. Look at the futures. Look at the way the E-mini. Look at this. This is unbelievable. I'm watching this. I see the 9-period moving average crossed over at about 5 o'clock this morning, and it's still green, but yet we've already gone to a leg D in the 10-minute chart, only a peak C in the 5-minute chart after absolutely fantastic. Look at these big spirals. Look, big move up to one peak E and then a peak D and pull back, and now we're in a peak C, and there should be, it doesn't have to, but there should be a test of that peak C to go to a higher high above 56.74, 56.74.25 will start leg D. And you've got a lot going on that says the volatility index, and I have not had a webinar for a little while. And one of the reasons is I've been giving my subscribers extra time on those Fridays or Saturdays, mostly Fridays, where I do my market overview. And we've really taken the time to drill. I have taken the time to drill down into the sectors. What is looking good? We were still looking at the steel stocks. Is this going to be a nice move for the steel index? Wow, yes, nice move up. But if you look at the weekly on the daily, but if you look at the weekly chart, it says, yeah, a lot to go before the 9p moving average crosses positive. Same with the monthly chart. And then in the den, we had Fletch mentioning the S&P Insurance Fund. Well, I've been following this now. I'm going to take a second to go there. So this will be here. I want to go to the Investors Business Daily. For some reason, why am I just blanking out what I featured last week? Actually, let me show you this here. This is the Investors Business Daily. Look, they've got about 2 weeks ago, we were at the 80 to 100% level for market exposure within a week. And then it went to 60 to 80%. And then for the last week, it's been down at the 0 to 20%. They're always a little late. They're a fantastic job overall, but they're always a little late. And Root, that's what I was looking for. So Root is an insurance company. I featured this for subscribers to my opening call just last week. And I said, oh, man, look at those insurance companies. They're already doing well. And invariably in a disaster, you think, oh, those poor insurance companies, somehow they always come out stronger. So look at this. Root is Root Inc. Insurance, super cheap insurance in leg D in the monthly chart. Months made a 530.60 all-time high back in October 2020. And a little bit of a pullback to $3.31 in March of 2023. And leg E in the weekly chart, leg D in the monthly. And when it was here, I was going to say, I'm thinking that this would be a really nice trade, even though it's at recovery highs. Once I see that it's already been to the 500s, and here it is in the 130 area, but it has gone very nicely to a high today of 154, round number high. Boy, those round numbers and those double tops. I've got a whole thing that I could talk about. I don't know if I want to waste time on it, other than to say what a fantastic technique in identifying potential tops and just turnarounds. So this is the KIE. Yes, is suggesting very strongly that this is an area of strength. It's actually a much better chart looking than the SLX, the steel ETF, which somehow is more struggling. The KIE has got that rectangle pattern that I always talk about. I've had webinars on this particular pattern, like a V-shaped pattern that says you have a very sharp pullback from a peak D, E, or F, and then you start to, without even testing it, you just make higher highs and higher lows. That should go to a leg D, just under, right on, or just above the previous high. So good eye, Fletch. Yes. So let's just do this. I want you to go. Let me do this again. So the Dow right now, the Dow is up 173. Very nice action. The S&P, and we still have, as I say, the short go all the way from over there, near the highs. I don't want to do anything just yet. So we can have longer-term positions with shorter-term trades, which is kind of what we've got. So we've got this is a very nice 2 bars. We're looking at days young, not even an hour into the session, but isn't this a nice green candle? So leg A in the S&P, the weekly chart still looks terrible. I'll be right back. Dow's up 177, S&P's up 27. I'll be back. Basil Chapman, Tiger Technicians.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Yes, I've just been asked about the SOXS. So now I'm not sure if this is like you want to look at a 1-minute chart, you want to look at the monthly, the weekly, the daily. All I'm going to say is that on a very short-term basis, the SOXS, which is the positive side of the SMHs, let's go to the SMHs, it's the same chart, doing very nicely. But let me just give you a bigger picture of this. The semiconductor index, the SMH right now, is trading up $1.83. Not great action when you compare it to the other indices, and that it should really be leading by a lot. But the fact that it's rallying quite nicely here is an indication to say that you cannot rule out a sector that has tremendous importance in the general market. Right? It made an arch formation, and as of this moment, it's taken out the 218 support, but the 200.49 low of August in this arch formation is still holding. And that's kind of sacrosanct. Once you take that out in the weekly and monthly charts, that's going to be a serious thing. And I suspect there's a chance that it might at some point, but right now, it looks to me like over the rest of the week, there's a chance that it could hit it's at 228 right now. There's a chance that it could hit 233 by Wednesday if this strength continues. If it hits 233, there's a chance that this oversold condition can continue just a little longer, maybe even into Friday. 237 is the 200-period moving average, where it was beautiful support. Now it's resistance for the SMHs. So let me just check to see if you've updated what you're looking at in terms of time. No, you haven't. So I'm just going to say on a very short-term basis, and now I'm going to go to the 10-minute chart, it looks to me like it's a you want the SOXS. SOXX, sorry, not the S is the short, this is the long. It's trading at 203.20 up 2.18. I would give this a target first of all, the left side high that needs to be hit is the one at 4 o'clock on the 7th. That was the high of 204.54. We're very close to that. But if we get there, then the real challenge is what happens at this whole area right here of 207.20. Because once we're above that, I think that then the SOXS, the SMHs that is, can go higher for longer. That's really what I think you're looking at, and that's what I'm looking at now. If you're looking at intraday, A, B, C still has to go to the 203, maybe 50s, and then we might get a little bit of a turnaround. You can see the automated Chapman wave resistance levels all here, 203.23, we're above that, 203.39, 203.43, and then all the way up at 203.60. Right now, the bullish side is my preference in this. I hope that helps you. Next question. And once we're talking about the semis, I really have no choice but to say the SMA, the Intel. So we saw this with General Electric when it made those lows back in the 70s, back in 2023, I think it was, and then just had an explosive move because they had a CEO that was renowned for turning companies around, and he is absolutely the star of 2024 as far as I'm concerned. Just a spectacular turnaround in GE. Now, we're looking at the chance that Intel can do that. Well, Intel has nothing but promise. And they've promised and promised for years and done nothing. In fact, it was funny because over the weekend, I was reading, so my wife had this course that she was taking on energy, and it had all the different things about energy. And of course, it had to have something to do with the different sectors. And one of them had to be the semiconductor area. And Intel was remarked on as being the leader for so many decades, for such a long time. And of course, it's been the loss leader right now. I mean, it's just, look at this chart. This is just unbelievable that you can make a double top in the 69.70 area back in 2019, December, I think it was, and then mid-2021, make the cup formation, and then just tumble 24.59 back in October 22, rallies to just on 50, and it comes down for this double bottom in the 19 area. Well, now is the chance that Intel could start to move. Now, wouldn't that be interesting if NVIDIA is a monthly chart. NVIDIA is taking a breather, but that, you know how I always talk about the scales of justice. On the one hand, you got this, on the other hand, you got this, and you want to weigh the two. Well, wouldn't it be interesting if Intel, because of the potential that the new CEO has a really good move? And it's, I love this. We were lucky at one point we had a particular stock, Solventum. We still have it, SOLV. And on a day that the market was just horrible, this thing had news about some kind of a sale of one of the sectors, and it spiraled to the upside. I love that, because what happens is now you've avoided that massive pullback, and when that market starts to come back again, you're starting from a higher level. So that could be what happens with the SMHs, that within the context of this arch formation, it doesn't maybe break this low that was made at 200.49 back in August of last year, but it has a successful one, and then it starts to make an M-shaped pattern that even goes high. I'm just speculating, okay? Because we know that there are now not just one or two, but there are dozens of people saying that is the end of the economy. This is going to be the downfall. The guy that predicted the golden age is going to see alchemy as the golden age just melts away. Who knows? But in the meantime, I'm looking at this and I'm saying, boy, the semiconductors are holding well, considering there's been a lot of competition and everything. Let's look at high-grade copper. High-grade copper is at a new recovery high in this cup formation in the weekly chart. It's at 4.93. It's up 0.03. And remember, we were talking about SCCO. I can't believe that I didn't actually get into it for subscribers. We had plenty of opportunity in the last three sessions. Didn't do it, held off. and it's gone from the 93 area to the 97. Not a big deal in numbers, but it's a big deal in the chart formation, because for the first time, the weekly chart is suggesting that over the next 2 weeks, if it can hold above 92, and in fact try to tag 99, maybe even touch 100 for the first time in a couple of weeks, then we're looking at a situation where you've got the right side of the Curo, that is the quarter of the semicircle, right? That starts the boat, gets the body of the boat on the right side, moving higher. We'll see. Okay, now where am I? So we want you to go back to the QQQ, now up $1.22 at 480.64. A work in progress, because this sector has just been hammered. So to be able to really move higher, you've got just a tremendous amount of work to do. 490 is the 200-period exponential moving average. Wow, 480 right now. That's a long way to go in this environment. Now let's go on to the IWM. The IWM trading down, trading up 77 cents. Nice, at 203.70. I want to go to Bitcoin as we go to the break, and then we're going to look at certain stocks. Bitcoin is down 2,000 at 82,830. You know, we were talking about this as kind of struggling here. The weekly chart went negative 2 weeks ago. So we're going to be watching this closely. Down 194, S&P's up 21. I'll be right back. Basil.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, You choose the direction. Visit direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
So the low that was made at 851 and back in September of 2024 started a weekly peak A, peak B in Intel. Then it suddenly spiraled up to a C. Let me just draw this in for you because this is very important. We've got the C right there, and we're waiting for it. It should get to the D, even though this is all, there is nothing, as far as I can see, fundamentally positive about Intel other than the new CEO. But this peak B, pulling back and holding quite nicely, the technicals are not that great, but the price is holding, and the 9-period moving average today just went positive, suggests that 27.56 starts a new leg C, and if it gets there, what we're looking at is that is going to be a leg D in the weekly chart, but a breakout from this entire 1 year. What week was this? This is the week of August of 2024, and now it's about a year and a half. Year and a half correction and building a base, but a base that would have gone much lower if there wasn't this news. And they're the ones that have, how much? 6 billion or so. I don't know, how much do they have from what was given to them by Ria Ramonda from Rhode Island, Secretary of Commerce, was she? Okay, so in the meantime, back at the ranch, what we're looking at is you actually had a counter trend rally that went to a peak E. This is from October of 2022 all the way to the 50 level, and then it came back in a pyramid fashion, straight up, straight down, and now we're starting to rebuild. So treat it as a counter trend rally, number one. Treat it as a potential. Look, here's the GE chart. This is not GE. Intel is not GE. That right there, you remember 2023, we're talking about, it was actually December of 2022, where I said to subscribers, should we get into GE? They're about to have a split to go to the healthcare and anything like that. And I said, it gets too complicated. How dumb was that? God, you just should have bought it, and we would have had a split from that GEHC. I can't even type it. It's too upsetting. Look, all the way from there, from the 55 area up into it hit the 90s. Right now it's trading at 81. I mean, come on. And then you also would have got GEV, right? GE Vernova. All right, well, doesn't matter. This is not, Intel is not that kind of company yet. So all I can say is this is a bounce. Just a very optimistic bounce, but it can go to, and if it does go to 28 in the next week and a half, 2 weeks, in other words, in March, and can actually last all the way through March above 20 to 25.84, above 23, that'll be very good action. But I would just treat it as a bounce. Hope that helps you. Our next question was, Tesla, TSLA. Yeah, Tesla. Oh, just to clarify, we are still long our IBIT, which is the iShares, because we got it much lower down. I'm trying to keep things as long as, there's some areas I'm just trying to keep as long as I can for subscribers, because we got in so nicely. But there's a chance that, they keep going down. We give back chunks of profit, but there's only one way to really build a position, and that is to try to hold on as long as you can, so that each time it goes higher, you've got a better and better position. Tesla down 11. Yeah, this is not a great-looking chart, but it did hit the 200-period moving average in the weekly chart with this. Not an Eiffel Tower. This is more like a pyramid formation. And my suspicion from the technicals is that it's the 217.02 low that was made 5 sessions ago. I think that will be tested. It just doesn't look too great. It's just oversold right now, so it's trying to bounce. That was there. And that next thing, I just wanted to see if there was. Yeah. Okay. Next thing, thanks for the SOXS. Basil, it helped with the SOXS. That last 10 minutes had a plus 0.50. Yeah, right. Okay. So good. Now, other question came in. This March, Empire State Factory Index falls to 20. Estimate minus 1.9. Oops, I can't read that correctly. Heads up and then, okay. Yeah, so I wanted to look at this. So oil. Oil's pulling back from the high of the day of 68.37. It's at 67.62. It's really struggling. It's trying to turn around. I suspect that at some point there will be a little bit of a push to the upside. That 70.09, let's call it 70, 200 period exponential moving average. Look at this. For weeks it was support, and then boom, it go right down. It became resistance, and it tags it and just uses it as it looks like a tightrope, right? And now holding on for desperation as the price pulls back. I just don't see anything. Well, I don't see too much in oil right now, even as a geopolitical instrument. Let's go to the next thing. So did that. TLT. The TLT right now, there's your lowercase h that goes to a lowercase m pattern in the monthly chart. There's your huge arch formation that went to a peak D from the 87.34 low of early about April, May of 2024, and it got taken out quite a bit. It went down to the 85 level. I think it was actually 84 something, 84, 89. Back on the 17th, week of the 17th of Jan, had a big spike up, and now it's holding sideways. So if you look at this, and that 200 period moving average in the daily chart, how that was resistance, and you do this, you'll find that that was the support. Look, here is the support level in the TBT, and it took it out. It tried to rally above it, and today it's below that 200 period moving average of 34.11, I think it is. If you look at the weekly chart, it went to a higher high. It went to 36.68 was the high back in April of 2024, tumbles down to 28, then rallies up to 38.98. So I said, I can't call this, because it took out the left side low, this has to be a brand new buy signal to buy mode. But when you see the stochastic fail and go down sharply, straight after making a high, especially these double tops are unbelievable. Look at this, 38.98. Months later, almost a year later, after the 38.68 high. I mean, these double top, I wrote them down here. Let me see if I got more. I did that. Yeah, 170. This is Rider Systems, 171.78 November high. Pulls back 2024, pulls back sharply, runs up and stops where? 171.59, double top, fails, and now it's down at the 141 area. These round numbers are amazing. These double tops are amazing. So are the round numbers. HD, Home Depot had a 439.37 high in November, but a 425 round number open that week.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Folks, this question about the round numbers. Yeah, Netflix had 1,064.50 all-time high on the 14th of Feb. Well, that same day, the open was 1,062, round number. No. Oh, wait, what did I do there? Was that the day before or the same day? Let me just check. 1,064.50 was the high. It had 100 and... Oh, it was the day before. Okay. Yeah, so that was 1,064.50 was the high. The very next day, the round number high was 1,062, and the open was 1,060. Oh, that's exactly what I wrote. That's for that day there. I forgot that on the 15th. And there's your round number, right? Amazing how that works. So could you look at D? Dominion Energy. I remember seeing that when I was in Salt Lake City, and then I realized how important it was to Salt Lake City. Nice move up today. Dominion Energy, a natural gas distributor, peak C in the monthly chart had an 88.78 high back in 2022. Had a little bit of a fall down to 40, actually 39 something, in maybe November of 2023. Has a good rally, and then the weekly chart went to the 200-period moving average resistance, got repelled. Now it's gone peak A, peak B with quite a bit of a pullback into the 55 area from 58. So now what I'm looking at is within the weekly chart. You see, it's essentially making higher highs and higher lows. You don't want to start seeing lower highs and lower lows. And so far, it's got another higher high, and it's rallying. It's in an area of natural gas that I think is kind of important. So what I'm going to do is a little bit different to what I normally do. I do it on a technical basis. But what I'm going to say is that on a fundamental level, the way Dominion has survived so nicely, and talking about surviving so nicely, I'm going to show you the chart of Exxon in a moment, ExxonMobil. And I've got to be a little careful here because I have a pattern. I'll probably have to show the chart. So I will show the chart. This is a pattern that I talk about often. I talk about it as a falling axe formation right here. This is the falling axe formation where the price goes up and then comes down and has lower highs and much lower lows. And then if it can turn around and make that base strong enough to be able to take out the declining trend line, the upper trend line, you can get a one-to-one to the upside. So it's called the falling axe pattern. It's really technically a declining, expanding cone. Too many words. So with that said, I also at some point said, you know what? This is exactly the same as that, except upside down. So I took the chart and I just flipped it over. I even got the headline upside down, but then I had to draw it so that type in so you could see the falling axe pattern inverted. So it comes down sharply and then makes higher lows, but much higher highs. But all of a sudden it starts to fade, turn around, and it takes out that trend line. What does this particular pattern mean? Here it is. Here's your pattern. You come down sharply, you're rallying. So all I can say is, on a fundamental basis, this whole choppiness here, when in fact it's kind of been under attack for a while, for a long time actually with natural gas. Natural gas has now been moving up very nicely, even though it's just pulled back. But most importantly, I think it's in an area of importance. So I'm going to say to you, at 55.27, it's full the gap from 4 sessions ago. Treat this as the starting position, and it will tell you whether or not it's going to become the dreaded H pattern at a peak B failing, or whether it's going to be a very successful rectangle pattern. These pullbacks are a little bit too deep. You remember the pattern that we were looking at now? I can't remember the chart we were looking at a little earlier. Oh, it was this chart right here, KIE. Remember, we were looking at it, and I said, this particular pattern, see, it didn't pull back so sharply. So this is more the cup formation, the lopsided cup formation. I'm only talking patterns. I don't care what the instrument is. We're just talking patterns. So that says this should have a lopsided move, and somewhere over the next few weeks, there's a chance that it could hit 62. That's the S&P Insurance Fund. This is a little different. What is D? Look, it's struggling. This is a struggling chart. But it's in the sector that often finds support and then that it just dwindles. So as I'm looking at it right now, I would say at 55.24, because you asked about it, it means that you're interested in it. You've probably done some homework and now you're looking at it. And if you're looking at it to buy, then what I'm going to say is start a small position here at 55.24. You've still got a long way to go for the 9-period moving average to cross positive, the MACD to cross positive, the stochastic at 24. But if it's a work in progress, it should get to the middle of this red candle within about 5-6 sessions. That's about over a period of a week and a half to 56.04. It's only 80 cents. It shouldn't be a big deal, but you never know. If it can do that, then it's going to be a cluster formation that says if it takes out in March 50, if it touches 58, this is a new chart pattern altogether. That means it's going towards the 200-period moving average of 60. That's why I'm saying I'm interested. I would have you start a small position right now. I would also have a stop of 2 points, 4.5% or so, just for the moment, and then I would have a trailing stop. And if it really works, then I would say that's your core position. And now we want to add to that's your core position. You want to add a trading position. That's the way. So let's look at it again, maybe in 3 days' time, 2-3 days' time. Next question came in, and that is, yes, ouch, I didn't see that. So minus 20 versus 2, minus 2 expected. U.S. March Empire State Factory Index falls to minus 20 estimate. The estimate was minus 1.9. Wow, that is a big difference. And that's what we're going to be seeing. And that's the reason why I'm saying that the yields, look, the yields, the TLT at 90.81 with the 9-period moving average still positive, says that there's a chance we could have yields pull back just a little bit, just for the Fed. Doesn't really have to do anything because the market will do it for it. Look at the TNX. I don't want to run out of time today. Let me just check my time. Yeah, the TNX is struggling. All right, but it's not breaking down. It's not breaking up. That's the yields, the 10-year yield, 42.87, 4.287. Let's go to the, where did I write it? For Friday, Monday. I did that. Oh, PANW. I can't believe that these cyber stocks are down so miserably. Oh, why is that a B? That should not be a B. That should be a C and a D. Yeah. So we've gone to a D in Palo Alto Networks. Over the weekend, I had a question. Now I can't remember. I forgot to type it out. Yeah. So this has got the double top pattern, 208.39, with a Chapman wave 2-bar reversal at its all-time high back in February. But wait a minute. Back in December, it had a high of 207.24, $1.30, less than $1.30 from all-time high, double top. I'll talk about it because this sector worries me a little.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So let me just do this here. Exxon, 200-period moving average 112.44. When it got tanked, right there, in the weekly chart from the 125 area, and it comes all the way down to 102 or something like that. Now it's running. But what's fascinating to me is, as long as I've been here at TFNN, well, I would say from 2000, and it's more likely 2007. I had someone in one of my classes that I had, one of my all-day classes on the Chapman wave techniques, and this person was given Exxon. And I said, what should I do? She said, I said, you know what? if you would like to use, if you don't want to just use the dividends, this is a fantastic company, survived 100 years or whatever. If you don't want to use those dividends to buy other things, but don't get rid of the stock. It's a survivor. Well, talk about survivor. With all the stuff that's going on, ExxonMobil is still, I didn't mean to do that. ExxonMobil is trading just under 1,300, about 10 points or so from its all-time high. Isn't that amazing? So that's ExxonMobil. And there are going to be legacy stocks like that in the Googles, Amazons, etc. We don't know which ones they will be, but there will be stocks that you just give to generation after generation. They don't have to do anything but hold the darn thing. Isn't that amazing? All right, with that said, the Dow's now up 155, S&P's up 9. So this is going to be a tough slog. That's why I said to subscribers, we've had really nice positions making in two days or so, making 7, 8, 9%. I don't want to get carried away here to the long side. It's just too early. We had specific stocks that have done very nicely, positions, I should say. So let's just watch this closely, because what we want to see is we want to see the Dow close quite nicely today, but you have to have all the others, and I would say especially the QQQ. I want that very oversold sector to be rallying and holding gains, and heck, this is the cyber area, and bots, the robotics. We'll look at that all tomorrow. It should be a fascinating session with today's close. We'll see where we close.